Hi everyone, and welcome to the Power Investing Power Sector Review. Today is February 7th, and we're going to take a quick look through both RSI and relative strength charts as well as relative strength rankings to get an idea of what's going on underneath the hood of the markets. Now, we always start here with our equal weight sectors, and looking at this one, we're still energy on top and is by far one of the strongest at 4.75% this week. It's held the 100 ranking here for a good bit, and even when it dipped about a month ago at 82, it's still been one of our stronger areas. Now, the interesting thing to look at, as I have this one sorted out by the weekly performance right now, is that communication services was the next best performer on the week, and then information technology. Now, from a ranking standpoint, communication services at 45, making a little bit of a move this week, and technology is about where it was last week, but did put in a strong performance as the markets tried to bounce out of the lows. Again, a lot of times when we have situations like this, the areas that are stretched the most can be the areas that bounce the hardest. Healthcare is the next as far as a performance, but yet all the way down at a 9 ranking. So when we rank these back by the relative strength, it's more defensive: energy, financials, utilities, materials, consumer staples. But on the other way, we saw the performers for the week were some of these more growth-oriented sectors. Now, something I want to note here is financials made a really good RS move moving up this week, even though I didn't note it just a minute ago as performers. It was at 2.72% and did make a pretty decent move here. On the flip side of that, consumer staples, which had been a strong area and very defensive while the markets were getting hurt, while it did pull back, not as much as the markets did in a lot of cases, it's not bouncing during this. And in fact, I'll show you here in just a few minutes that its breath looks pretty rough at the moment. That can certainly change, but right now it is certainly not showing that it wants to remain a defensive leader. Now, when we move on down to the equal weight subsectors, there's a couple different ways to look at it. Obviously, right now, we're coming out of a pullback. We see the strength here is still in energy, some utilities, some banks, and things like that. Industrial metals has jumped up here. It moved 12 relative strength points. When I rank this by RS movers, our biggest mover was consumer discretionary on the week, up 3.64% at hotels, restaurant, and leisure. The next was another consumer discretionary, diversified consumer services. We've talked about them the last few weeks as being ones that were strong in a weak area, and now they're starting to move up the actual relative strength versus all the other subsectors. One that caught my eye as well in financials has been a laggard for a little bit, but is now starting to perk up a good bit, which we'll see in a few minutes. The brokerage and capital markets, and then of course industrial metals. We mentioned that with the dollar a week or so ago, that they were at their bottom of their ranges, and a lot would depend on whether the dollar weakened or strengthened, and it actually did weaken over the lose some ground. So these metals picked back up for the week with a 5.58% week in our equal weight index. Next, communication services, interactive media, and entertainment. So let's start running through some of these sectors, take a look at what's going on and basically what's working out there. Our first is going to be energy, and this is our highest ranked. Not going to spend a lot of time on this chart, but as you can see, it was still in the equal weight standpoint. It broke out, pulled back, and kind of a failed breakout, but now has moved back up to those highs and looks like it wants to continue to move. Now, if we have some oil weakness here, this could take some time or move sideways, but right now, still one of the strongest charts we see. Now, as far as the subsectors to focus on here, we won't even stop at breadth because we all know it's pretty strong. We've showed you that on many different measures, and as you'll see in the short-term breadth on the blog post, it's there as well. But it continues to improve, and even its summation is turning higher and staying crossed, and its breadth thrust is up in the mid-range, nowhere near a high or a low. The relative comparatives on energy are all strong and staying strong, even though they're starting to get a little more volatile up here at the top. A lot of that has to do with this little kind of small high handle that we're looking at, and the percent making new highs and new lows has been strong as well. Now, when we look at the subsectors, oil and gas production has been by far the big leader here, really ran away from the pack, but recently we're starting to see oil services pick up and jump in here. Now, from a standpoint of ETFs to look at, again, I like oil services with OIH. I think some of these bigger ones have run pretty hard. RYE looks decent as well, giving you a good mix with the equal weight, but I really probably would be focusing on OIH here if I did not think energy was going to pull back or slow a little bit at the moment. If OIH makes a breakout, it's something we should be paying attention to. As I move over to the oil and gas equipment, you can see this chart right here as we zoom out, it has not even broken out. From an energy standpoint, it's been in a really big sideways move here now for over a year, or almost a year, but its relative strength has continued to oscillate from down low, going up high, down low, up high, down low. Now it's back up, and all three of our measures are up in the 90s. I would expect a breakout here. The question is going to be how many days or how long it takes to do it. Does it want to consolidate a little bit more, or is it ready to go? It's what we'll be keeping our eyes on. Now the next sector is financials, and financials, move back to the top here real quick, has moved back up in the 3-month relative strength to the second spot. As you can see, its chart never really broke down and stayed above last year's consolidation during this. Its RSI is in a bear range, but again, right at 50 and one of the stronger ones out there. As we said, it made big RS moves this week. Its breadth is better than the overall markets, but still not screaming out there. The short term is starting to try to get back over 50. Once we get it back over there, we'll have all three of the moving averages over 50. Summation still we'd like to see across there. And then you pull on down here to the subsectors. I'm going to skip over this. Go to our subsector rankings. Number 3 is insurance, and then number 5 down towards the bottom, I'm going to look at brokerage and capital markets. Insurance, we all knew regional banks and banks were performing well. Insurance has perked up a little bit here. As you can see, it's starting to move up on all levels, not fast, but slowly moving up. And looking at its chart, it's trying to hold up above this consolidation as well. Still in a bear range, but insurance is an area that I might look at as it continues to improve in short-term breadth, and its long-term breadth are both over the 50 level on the MA breadth, and its summations getting ready to try to cross again. Now, brokerage and capital markets, as we said, it's one that has been a laggard for a little bit, but it looks like it's starting to see its RSI kind of roll higher on all 3 levels at the moment. So this is one I, again, would keep an eye on inside financials and see if it can play some catch up. It's right here at this polarity level where it was resistance, then support, now resistance again. A break over this area could bring us into a new RSI bull range. Again, still in a bear range, so that's our overall context, but it's something we want to be continuing to focus on. With breadth improving here, the percent over the 20-day moving average just broke 50 this week. We'd like to see the 50-day get over there as well. The summation made a cross here, as we can see if I expand this chart. Made a cross here and is trying to turn itself up as well. That's a great intermediate signal oftentimes in these subsectors, and its breadth change here from the percent making new highs on the short term. It waned here towards the bottom and then made a good nice hard spike on the percent above the 10-day moving or 10-day highs. And then on this last couple of days, it hasn't really given much back at all. Now, we still need to see these longer term expand, but right now this is one that we are focusing on. There's quite a few stocks in here you can take a look at and get a closer view of. I'll put some of them in the captions of the post. Consumer staples was on the other end of this. Okay, consumer staples is one that does not look as strong. At the end of the week, it gave back most of its early week gains and ended up down on, or all of its early week gains ended up down in almost all of the bounce gains here. As you can see here, it's got a negative reversal on RSI and just does not look like it's strengthening. It's actually giving up relative strength points as the markets are bouncing. Its defensive nature showed up in its breadth as well, because it just did not get any love this week at all. Inflationary pressures for some of these companies showing earnings definitely peaked out, but it's only got 21% above its 20-day moving average and only 38% above the 200, and all of these are pointed down, including the summation index, and the oscillator could never make it above 0. So until that improves, I would not be focusing on consumer staples. Now, when we flip over to the ones that had some performance for the week, I'm going to flip over to information technology because it had a pretty strong week. And as you can see, it bounced hard off the lows. It came back down and tested that, and then Friday closed back higher. One of the things that I want us to note, and that can be important, is that if these RSIs come up and hold this 40 level and move back higher, that can be kind of an early signal. Of course, it can fail like it did back here. But if we can get some continuation, we certainly want to note that they held there at the 40 level. Now the breadth here is still pretty poor in technology, so you are buying the reversion or the retracement. You are not buying a long-term hold yet until it proves itself more. As we look here on the percent making new highs, again, a small spike, nothing impressive yet from technology. It still needs more strength. And looking into the areas, IT services and hardware on top, semiconductors and software are still on the bottom. Am seeing some good software names kind of poke up, but it's not something that you want to jump out ahead of. Also, if you're looking for technology but something a little on the safer side, TDIV and TDV both look decent. LEGR, these are our leaders right now in this technology area, but so you also see XLK up there, just a good broad-based market cap weighted, showing relative strength as well. So the space itself definitely is trying to improve this week, but has a long way to go. Like the software chart shows, basically there's no RS over the last 3, 6, or 12 months here. It's in a clear downtrend, but looks like pretty equal legs. So now the question is, how far do we bounce? What happens when we get closer to a consolidation like this? With this, we are having to be very conscious, but knowing it's such a heavy pullback and a weak sector here, when we go down to the relative strength rankings, we do want to look at some of these stronger names. You don't need to go all the way down into the 50s or 60s to find good performers. Some of these stronger names in a weaker sector could be the way to focus. Before I hop off technology, another thing I want to note here is if you will look at its relative comparatives right here on our chart versus, this is software, versus all the different rankings it has, it flattened out last month and is now starting to turn up just a little bit versus technology and versus some of these other areas. Now versus the SPY, it still has a lot of work to do, but this flattening is a good start. Now the final sector I'm going to go through here is materials. Materials is one that on the equal weight in the smaller area continues to perform pretty decently. It's one of those areas you have to be very conscious about where you're going, and industrial metals is probably the best spot inside there. But looking at the sector as a whole, just quickly in the RSI chart, you can see here that it's still in its range. It didn't really lose that range or break down, and we had a strong day on Friday to kind of reverse back up the CFG below zero. Now it is in a bear range or a spike type mode, so we do need to see that performance continue into this week, but I would certainly be looking at the industrial metals there as they pulled back to a pretty good potential support level. All right, so I'm going to end it there here. I've gone through my 13 minutes. Hope everybody has a great week, and I hope this helps you get started. We'll talk to you soon.